Everybody, Futures Brizio here. It's been a hot minute. Hope everybody's doing well. Happy 2026. It's been about a month since I made a video. Actually, yeah, pretty much a month to the day. I made one about 10 days before Christmas. And as I had told you guys, I was heading out of town. I was gone for a couple of weeks, got back around New Year's. Uh, so other than a couple of YouTube posts, not videos, but I did put up, I think, one or two posts prior to Christmas. I have not posted anything, so I apologize. And I probably would have made one sooner than this, but last week I had a lot of computer issues too. I had about a good solid 4 days where I ran into some pretty big computer issues with hard drive booting. And so I did order a new computer. This one I've been using, believe it or not, it's at least 8 years old, which I can't believe when I finally looked back at when I bought it. And so short story is I did put a new hard drive in it, even though the old drive was a solid state drive, and I was able to boot it, but it still has some issues with it being slow. I've worked with a computer guy. We really can't seem to get to the bottom of it. So I think it's just time to upgrade. So I did buy a really cool, nice machine that I configured. Be here probably next week, and then it'll probably take me a few days to get it set up the way I want it before I'm ready to actually use it online. But that's the plan right now. So in the meantime, I got this one at least functional, and hopefully everything's coming across okay. So with that said, make sure you smash that like button, subscribe to the channel. Any questions or comments, make sure you leave them down below as always, and we'll just jump right in. So for today, something a little bit different, and I've done similar things like this before, but we're going to talk about what you can do with trading markets, whether it's futures or not, whether it's futures or Forex or stocks or whatever it is that you trade. If you don't have a lot of time, maybe you have family obligations, maybe you have a job during regular market hours, and you cannot just be in front of your computer, for, maybe even an hour a day, but certainly not, 2, 3, 4, 5 hours a day during the meat of the morning and early afternoon looking at charts and trying to scrape up a day trade or two. For some people, that's just not possible. And for others, it might be possible, but you don't want to do that, okay? Because the fact of the matter is, the lower you go on time frames, the worse the statistics say in terms of success rates. When you get down to a short time frame, down into the minutes, the success rates are terrible. The 70 to 90% of people will lose money over the long run. And as you go up in time frames, those odds get better. They're still not great, but maybe it's 70% still will not make money. But at least it'll start to get a little bit better. But the fact of the matter is, people that trade on really short time frames, as much as they might want to try to tell you, most of them are not going to be successful in the long run. You may have some little success here and there, but it's very hard to maintain that because you're just trading on a time frame that's very noisy, and you're taking a lot of stress for a small reward in terms of how much the market's going to move on a really short time frame. So I don't want to get into a big debate on that. That's just what the statistics say. So for anybody that either doesn't have the time or the desire, well, what can you do? Well, sometimes swing trading is the way to go. Now you can swing trade. I would say swing trading can be on most time frames from about the 1 hour above. You could consider that swing trading. I generally consider swing trading like the 4 hour chart and better. But sometimes that's even too short of a time frame for people that have busy lives during the day. Because if you get, let's say there's you start looking at the charts at 8 or 9 o'clock in the morning, and there's a candle, 4 hour candle that starts. Well, that candle is going to go on until noontime, and so if there was no trade right there at the first open of the morning, then what are you going to do? You're just not going to trade because you don't have time. So the other alternative to that is going in an even higher time frame. And I can tell you from my Forex trading, and I don't really talk much about Forex anymore. In fact, I don't talk about it at all on this channel now. For those of you that have been on my channel for probably 2 years or longer, you know this channel used to be called Forex Brizio. And about 2+ years ago, I switched it to Futures Brizio, and that is primarily what I trade now. Now, I do still have a couple of small funded accounts in Forex. I do not trade a personal account at all in Forex. I still have a demo account with a Forex broker, but it is a demo account. I only use it for analysis, and quite frankly, I'm probably going to get away from that and just put everything on TradingView, which if you look at my watch list here, you can see all the Forex pairs. I started moving those over. And so that's probably where I'm going to go, and I probably won't even use that MetaTrader demo account with my old broker anymore because I just don't need to having this. And so I do my analysis on here, and then for Forex, I take trades on my funded accounts. So that's pretty much how it goes. So like I said, I used to only trade Forex, and for years, probably 10 years, that's all I did. And then a couple of years ago, I started kind of making the move to futures. And like I said, that's pretty much where I am now. So for futures, I trade a personal account and a funded account. And I also trade some stocks. Those are more, I don't not want to say those are just for investing. I trade those on a daily chart too. That's kind of third. So my order of importance is futures, Forex, and stocks in terms of what I spend my time on. But this video is going to encapsulate basically the methodology for all those things. Okay. And so let's just get right into it and just talk about it. So what I like to do is on futures, you can use a daily chart if you want on futures. Now, if you just use the actual contract month for a particular asset, like, so if I go over to my, let's go over to my, this is my personal account. This is an open trade I have on soybean meal here. Let's find one where I'm not actually in a trade, just to not get distracted by that. All right, we can just look at hogs. It doesn't matter. Now, this is an hourly chart, which is fine. But if you go to a daily chart, you can see the problem here is that because futures run on contract months, which have a limited time period that they're active, this is all the price data there is. And so, you know, it visually doesn't look good, and it's really hard to like interpret anything. Here's the daily chart of corn for the March contract. And you can see it's way off to the right here. There's basically about 10 candles here, and you cannot do that, okay? However, if you go on TradingView, the nice thing about TradingView is it consolidates all of the contract months into ZL1 with an exclamation. So that is on this. It trades the front month, which is March. So ZL1 soybean oil, ZS1 is soybeans. And so this is really why TradingView is so much more superior than something like MetaTrader, because even though these are contract months, I can go back here and I can see lots more price data. Okay, because I'm trading a consolidated view with these exclamation points next to the asset. And but if you do take a trade, you're trading. It will put your trade on the front what they call the front month, which right now for soybean oil I believe is the March contract. Okay, and so what I like to do with futures is use a 10-hour chart. Now you can use a daily, you can use a 12-hour chart. I think for futures, anywhere between the 10-hour and the daily chart is fine. And soybean oil is kind of a choppy market. But so just for the ease of visualization, let's look at soybeans. Here's the 10-hour chart. And the other thing is here, I have Heiken Ashi candles I'm using. These are not regular candlesticks. They're Heiken Ashi candles. However, you can use either. And I have them both set as favorites here. So you can see it's defaulted to Heiken Ashi. If I hover over this, this is regular candles. I can just click this and switch over, which is a nice thing about TradingView is, everything is pretty simple just to switch. I'm going to go back to Heiken Ashi, and I'm not going to get into a big discussion on Heiken Ashi. I've talked about it before. Heiken Ashi candles are calculated differently, so there are some things you need to keep in mind. I don't want to call them disadvantages, but there are some things to keep in mind. But the nice thing about them is they smooth out a lot of noise. They make finding swing areas much easier. But you have to remember they don't show the actual price because they're kind of an average. They take basically an average. That's what the actual Japanese word for Heiken Ashi is average bar or something like that. So, but if we look here, this is again a 10-hour chart, and you can do this on a 12 or a daily chart. You can clearly see where there are excellent entry points here in this downtrend. We had price come down. Here was an entry here. And then as soon as we get basically a bearish candle, this is a shorting opportunity. Come down here, we get a small pullback here. Okay, we get actually another one here, but even if we just ignore this one, and then we have this one here, another nice one, and then this one here, and then, you kind of get the point. Okay, so it really helps keep you from over trading. Now, I guess, quote unquote, a disadvantage to this is that you're not going to get a lot of trades, okay? You're just not. If you're trading on a 10-hour, 12-hour chart, you're getting 2 candles a day that paint. If you're trading a daily chart, obviously you're getting 1 candle a day to paint. So you may have to wait, like on this pullback right here, this was like 1, 2, 3, 4, 5, 6. This is more than one trading week for this correction to play out. But then once it came in, you were holding this trade for probably, this looks like about 8 candles. So now once you get in here, you've got basically 2 weeks. You're holding this trade down to new lows, right? The Heiken Ashi candle stayed red the whole time, okay? And you could have just held this trade, okay? Now, in terms of exact entry and exit points are a little bit beyond the scope of this video, but you can, for entry, you can either wait until you get ideally you want to get a doji candle in the direction of the prevailing trend. So that's why this one's like textbook, right? Because we're in a downtrend and we get this nice correction, and then we get this little doji bearish candle. That's suggesting that the price, the uptrend is running out of steam. We're probably going to resumption. So I would most certainly enter right on this candle right here. Okay, and put your stop above this swing and just let it go. Same thing here. We pulled back here. We actually had a bunch of little dojis. You could have gone short anywhere in here. You would have had to sit in a little bit of sideways action for a couple of days, potentially, depending which one of these candles you got in, but then finally it did drop. Same thing here, right? 2 blue candles, and then basically a doji bear candle right here. Same thing, right? Pull back. Now on this one, we had these little dojis right here, and obviously the price went up. But, I don't really consider this a real valid pullback because the price just kind of went sideways and then it went up. So I probably would have ignored these anyways. Plus, at this point, we hadn't broken market structure. We had this structure sitting right here, okay, from this previous run up, and that didn't break right here. So I wouldn't have entered this anyways because we had no confirmation of a market structure break here. So that would have kept me out of this trade either way. But then when I would have seen this go up and fail to come up and make a new high and roll over and start going down, that would have caught my interest, that this really was, kind of a break right here, a retest back into the range, and then it falls off, okay? But the bottom line is you can see how you can use Heiken Ashi candles to really clean up the noise and also keep you in trades, for a prolonged period of time, because the Heiken Ashi candles in this run never turned blue. So there was never an exit here. Now, technically you would have probably exited on the first blue candle, which would have been right here. and that would have been fine. And actually, you could have, if you wanted, you could have held it through this. But even if you did exit right here, 2 candles later, you got another entry signal, and you could have gotten back in again. All right, but you can just see the ease by which this flows. Now, you need trending markets for this. Like I said, soybean oil. When we were looking at that, I mean, you can do it here too. I mean, you have entries here and here and here, and on the way down right here and right here and right here. So this chart just looks more noisy because long range, it's more sideways. But actually, if you look at where soybean oil is right now, we're potentially, in a corrective phase that could lead to another uptrend, another wave up. We've got this new high that formed. We're pulling back. We have a bearish candle now. I assume we'll get at least one more. We may get several more, but as long as we don't break market structure, which to me, market structure is sitting down here, as long as we hold this area, any pullback in here is a potential buying opportunity. So this is one to actually put on the watch list, right? Now, but again, we may wait a couple of days or so, maybe more, maybe less, for this uptrend to resume. But once you do get it and you get in, assuming that it's going to go make a new high, you'll be able to hold that for quite a while. And that would be a good target. If you got down here, that would be quite a while to get up here and a really nice trade. Now, on the other side of it is talk about stop loss. When you're trading on high time frames, obviously you got to be very cautious about stop loss. So you have to put the stop loss in the right place. Don't be so tight with it because you're worried about the risk. And you have to position, most important, control your risk and put on the right position size. Now, the nice thing about Forex that you can't do in futures is in Forex, any of you that trade Forex know that you can put on anywhere from a teeny tiny lot size, because Forex trades in lots, not contracts, teeny tiny lot size all the way up to as large as your account can support. So you can, customize that position just based on how much risk, how much dollar risk you want to take on that trade, because you are going to have to put your stop loss, in an area where the trade has some breathing room. But on a high time frame, that can be a very big, zone as opposed to trading on a 1 hour chart or a 5 minute chart, right? So make sure that you are trading with proper risk management and positioning, using position sizing properly. Now, in futures, the way that you can do that is that you can trade a market if you don't have a big enough account. You can trade markets that have micro and or mini sized accounts. So soybean oil is one that has, this is the full contract, the Globex contract, but you can trade it on a micro account too, which is 1/10 the size of a full account. And usually, if it has a mini, and I don't know off the top of my head, I'd have to look, whether soybean oil has a mini version. So it's kind of like in Forex, you have standard lots, you have mini lots, and micro lots, okay? So the standard lot's like a full contract in futures. The mini is a mini contract in futures, all right? And a micro lot is like a micro contract in futures, all right? So full contracts, mini, micro. Not every market has that, okay? Some only have the full contract. Rice is an example of that. I trade rice. Rice does not have mini or micros. Hogs is another one that I currently have on my watch list. No mini or micro. So if you don't have a large enough account, you should not be trading those assets. You may not have enough in your account to even trade them to cover the margin. But more importantly, even if they let you open a trade, if it goes against you, that could wipe you out. Okay. So just be smart and control your risk. Know before you get in, how much you can risk. Calculate your stop loss. Again, another nice thing about TradingView is when you set up a trade, it will tell you, if I want to say I wanted to get in long right here and put my stop loss at, I'm not going to, but let's say I was going to go long here. I want to put my stop down here at 50.2. Well, I come over here I check stop loss, and I put in 50.2, it's going to tell me right here that I'm risking $270. You can see right there. Okay. So that's the nice thing about TradingView. Even before you click buy or sell, you put in your stop loss. It's going to tell you exactly how much you're risking, how much of your account, and the tick value and all that stuff. Okay. So I'm not going to actually take that trade. I just wanted to show you. Okay. So that is the key thing. Well, the key thing in any strategy, I don't care what it is to control risk. But when you're trading on a high time frame, the nice thing is it's only going to take you a few minutes a day to look at your charts and decide whether there's even anything potentially setting up for that day. And you can set alerts if you're not in front of your chart. Set an alert. Another nice thing about TradingView, although most platforms, even MetaTrader, has alerts. And if there's not, you can move on and forget about it until the next day. Okay, so you really only have to look at the chart really once a day. Maybe you look at it twice, once in the morning, once during the overnight session or after the market close. See what happened and see if you had something on your watch list, if maybe it's getting ready to set up. Okay. So, and again, you don't have to use Heiken Ashi candles. I just like using them on these high time frames because it smooths out the noise, and it does give me more confidence that when I do see something that looks like a signal, as long as I'm trading in the direction, there's a clear trend, and I'm trading in that direction, that signal is probably going to be good. And then I get in, I set my stop loss, and I just leave it alone. I'm not going to go down and micromanage the trade on a 15-minute time frame. I'm just going to leave it alone, set my stop loss, maybe set a take profit depending on the trade, and just let it go. Okay. And that is the most important thing. So practice good risk management and position sizing. That goes for no matter what strategy, no matter what time frame, no matter what market. Okay. Can't stress that enough. But it's especially important in when you're trading what I would call longer term swing trades. Okay. Because you might be in a trade like this, if it works out, you could be in a trade like this for days and days. Okay. And so you want to make sure you give that trade plenty of breathing room, and you want to make sure that if it does move against you, it doesn't blow up your account. Okay. So trade markets that you can afford to trade. Don't trade in markets where you can't get down to a position size that you're comfortable with. If you're going to be, if you can't sleep at night because of a position you have open, then it's too big, So you're going to wake up the next morning and pray that you didn't blow up your account if it moved against you, then your position size is too big. You should be able to withstand stopping out of any position you put on. Hopefully you don't, but you're going to. That's the cost of trading. It's the cost of doing business. Nobody wins 100% of the time. And you don't need to be profitable. You just need to take good trades, be patient, and size your position accordingly, so that when things do move against you, you can live to see another day. Okay. So I hope that makes sense. I didn't really want to get into a whole thing about risk management, but it is the key thing. And when you're a trader, you're not seeking profit, but your main job as a trader is that you are a risk manager, right? You have to manage risk, because if you don't manage risk, you blow up your account. You won't be around to trade no matter how good you think you are. Okay. And, over the many years I've been trading, I've made and lost a lot of money, but I've never blown up an account. I've blown up a couple of prop firm challenges because their rules are so crazy sometimes, but personal accounts, I've never blown them up because I've always practiced good risk management. Maybe I blew up a couple when I first started. I don't know. It was a long time ago, but in the last probably 5 to 10 years, I've never blown up an account. I've had drawdown, sometimes some pretty decent drawdown if I got stupid, but I've never blown it up where I had, zero. So, all right. And if you practice good risk management, you shouldn't. You should be able to, you're going to have drawdown. Your account will go, into maybe substantial drawdown if you have a long streak of losers, but they should be small enough so that your account can withstand it and you can come back. Okay. All right. So enough of that. Okay. So that's basically the strategy. So you need a trending market. You're going to use Heiken Ashi candles preferably, although you don't have to. You can use regular candlesticks. But again, the Heiken Ashis will smooth out the noise and they'll allow these trends to play out, and they'll allow these corrections to play out without you trying to jump it too early. Okay, either getting out of a trade like this too early or getting into a new trade during a correction like this, and you get in too quick and the market continues to move against you, and you end up taking a loss or having excessive drawdown that you didn't need to. Okay, so that's that. All right, so that is soybean oil. So that is a potential to watch this one. Okay, so here is soybeans already looked at. So if you're using this methodology, there's no trade on soybeans. The entry was basically on Monday or Sunday night, and then price went down, and now you can see I did take a trade on this today. It was a small profit. I did take this on a shorter time frame. It was basically a scalp I took. I made a couple of points on it, but nothing really great. But if you're trading the methodology that I'm talking about here, then the last entry on this was right here, somewhere in here, doesn't matter. Any of these candles, these little dojis would have been fine. And then down to these lows, that would have been a good target. Okay, so for now, there's no trade here. So if the downtrend's going to continue, then what we expect now to see is some kind of pullback here. How far, I don't know, say 50%, I don't know. And, you're going to wait for that to set up, and then, you're going to take another short. Okay, and that's what we're waiting for. Okay. Canadian dollar. This one, I'm not real crazy about this. As I mentioned before, and I did take a trade here on this today. It was a break-even trade because I didn't like what it was doing. And the reason why is because of what I'm going to tell you right now. And I showed you this on a chart. It's because this correction is like slow and kind of moving sideways. So I really like to see the corrections go up a little bit. And, maybe eventually sideways, and then it'll just blast right down again. Now, based on the rules, you could obviously take this trade because we've got little small dojis. We've got bearish Heiken Ashi candles here. You can see price did try to go up several times and failed. Okay, and this may eventually, this might just turn and, break here and go down from here. I mean, it might, but it's not ideal because I like to see the pullbacks be a little bit more aggressive, up, and then have it turn and come back down. And did we see that on soybean meal, soybean oil? Where is that? I was just showing you guys. This is the thing with my computer, guys. Very slow. I don't know what's going on. I can't wait to get my new one. I really can't. Okay, well, whatever. It doesn't matter. Okay, so we'll just move on quick here. Canadian dollar. This is just going to get, unusable. So that's what we're just talking about, Canadian dollar. Soybean meal. Okay, same thing. We had an entry back here, down to new lows. So I'm not selling this now. So basically, I'm going to let this downtrend play out. I did take a trade on this today. Ended up being, looks like I lost one tick. So and that was a small trade. And again, because I was selling down at the bottom. So it was supposed to be a scalp. So, but again, I was selling at the low. So again, if you want to use this methodology, I don't know how low this will go. Let's say it stops right here, and then it retraces somewhat, and then we wait for a signal up in this area, and we take it down to new lows. Okay, so that's basically what we're waiting for. Okay, and then corn's a real shit show right now. I'm in a short here on corn. Same thing here. Probably, I do have a stop loss sitting here. I think this one will go down a little bit more. But again, I took this on a short time frame. You can see it's in loss right now. But I'm going to hold it. I was going to close it tonight, but I think I'm going to hold it. If I get taken out, I get taken out. But again, you can see what's happening here. We're at if these end up being the lows and we're starting to move sideways, then, it was a late entry. The entry was obviously way back here, although this is a crazy move. So this is like really parabolic. So actually, this probably will pull back quite a bit more just because after such a big run down, the market probably will take a big breath here. So I may end up closing this one anyways. But there's no trade there either way using this methodology. And on hogs, not really a big fan of this price action right now. You see it's very choppy and sideways, so we're not even going to talk about that. Um, yeah. So, all right. So let's just talk really quick. Now, again, guys, you can do this on stocks. I'll just show you one stock. This is Oklo Incorporated. If I can get it to load. Okay, and again, it's kind of the same thing, right? We've got, you know, downtrend pullback, right? Down, little pullback, down again. Now we're up. Now, this is not one I would necessarily trade because I want to see now if this is a break of structure because you can see we did wick through this area. So do we back fail to make a new and then I look for a this one I think is equal based on that let this play and see what it does. So if that pull back Forex will this is the real can do nothing. a lot of my chart